While the world is distracted by Christmas lights and holiday celebrations, something very dark is happening in the global financial plumbing. We are exactly 7 days away from January 1st, 2026, a date that marks the implementation of new banking regulations that could fundamentally change how you access your own money. If you think your savings account is a safe haven, you're making a mistake that could cost you everything in the coming weeks. For months, we've watched the Federal Reserve and the Treasury quietly prepare for a liquidity event. Behind the scenes, the bail-in laws are being polished. Most Americans don't realize that since the 2014 banking reforms, money deposited in a bank is technically no longer your private property. It is an unsecured loan to the bank. And on January 1st, new capital requirement rules are set to squeeze the remaining life out of regional lenders. Where does silver fit into this chaos? Silver is the exit door. As the banking system tightens its grip, the demand for hard assets is reaching a boiling point. The banks know that if everyone tries to exit the dollar and enter physical silver at the same time, the price won't just go up, it will break the system. This is why we are seeing such desperate price manipulation right now, just days before the new year. We are also seeing the rapid rollout of programmable currency pilots. These are designed to track every transaction and, more importantly, to prevent bank runs. If the market panics on January 1st, the digital infrastructure is already in place to limit your withdrawals to a few $100s a day. This is not a conspiracy theory. It is a technical reality that high-level finance insiders are already preparing for. Why is 2026 different? Because the debt-to-GDP ratio has finally reached the point of no return. The interest payments on U.S. debt are now higher than the entire defense budget. The government has two choices: default on the debt or inflate the currency until it's worthless. They have chosen the latter. This silent default begins in earnest on January 1st, and your purchasing power is the first casualty. Look at the COMEX silver deliveries. We are seeing a record number of failure to receives. This means the big buyers are asking for their metal, and the exchange is literally asking for more time. When the world's most powerful entities cannot find physical silver, what makes you think you'll be able to buy it at $75 or even $100 next month? The window for physical acquisition is closing. Don't forget the geopolitical side. January 1st is also the date when the expanded BRICS nations are expected to announce their new trade settlement framework. This isn't just about another currency. It's about a total decoupling from the US dollar system. If the world stops using dollars to buy oil and commodities, that trillions of dollars will come home to the US, causing hyperinflation like we've never seen. Most people think bailouts are the norm, where the government saves the banks. But a bail-in is different. The bank uses your deposits to save itself. Under the new 2026 guidelines, banks have more legal protection to freeze accounts during a systemic emergency. This is why having physical assets outside the digital banking perimeter is no longer optional. It is a survival requirement for your wealth. The cost of mining silver is also skyrocketing. With energy prices remaining volatile, several major mines in Mexico and Peru have slowed production. We are heading into a supply desert in 2026. The banks are trying to keep the price down to cover their shorts, but they cannot manufacture silver out of thin air. The physical reality of supply and demand is about to collide with the paper manipulation. Why are billionaires like Warren Buffett and Jeff Bezos holding record amounts of cash and liquidating stocks? They know the everything bubble is hissing. They aren't waiting for the crash. They are preparing for the great reset of valuations. When the stock market corrects by 40 or 50%, the only assets that will retain and multiply their value are those with zero counterparty risk, gold and silver. The most dangerous thing you can do right now is wait and see. By the time the news hits the mainstream media on January 5th or 6th, the price of silver will already be $15 to $20 higher. The premiums on physical coins will be 50%. You won't be able to buy at the spot price. History shows that in a currency crisis, the move happens in a weekend. This is that weekend. Even your retirement accounts aren't safe. Many pension funds are heavily invested in the very banks that are currently trapped in silver short positions. If these banks default, the contagion will spread to 401ks and pension plans. Diversifying into physical metal is the only way to ensure that your lifetime of work doesn't disappear into a digital ledger during a bank holiday. We are entering the great disconnect. The price you see on your phone screen, the paper price, will have nothing to do with what you have to pay to get a silver bar in your hand. We've seen this before in 2020, but this time it's permanent. The COMEX is losing its ability to set the global price because the East is now setting the price based on physical weight, not paper contracts. What should you do before the clock strikes midnight on December 31st? First, ensure you have enough cash outside the banking system for 30 days of expenses. Second, verify the physical delivery of any silver you own in unallocated accounts. Third, ignore the mainstream media's all is well narrative. They are paid to keep you calm while the smart money exits the theater. The AI revolution is a silver-eating machine. In 2026, the demand for silver and data center infrastructure alone is projected to grow by 300%. This is inelastic demand, meaning big tech will buy it regardless of the price. JP Morgan can't stop Apple or Google from buying silver. When these giants enter the market, the retail investor will be completely priced out. The time to buy is now. The US dollar has been the world reserve currency since 1944. No reserve currency lasts forever. We are at the end of the 80-year cycle. Every previous reserve currency ended in a massive devaluation. Those who held the New World assets, which at the time were precious metals, were the ones who built the new empires. We are witnessing the changing of the guard in real time. Central banks hate silver more than gold. Why? Because silver is the people's money. It's affordable enough for the average person to hoard. Gold is for the elite. Silver is for the resistance. By keeping silver prices low, they prevent the masses from realizing that the dollar is dying. But they've run out of physical metal to keep the lie going. The truth is, coming out on January 1st, we're about to witness the largest wealth transfer in human history. It's moving from the paper class to the asset class. Those holding digits on a screen will see their value evaporate, while those holding physical ounces will see their purchasing power explode. It's not about how many dollars your silver is worth. It's about how many assets your silver can buy after the reset. Remember, liquidity is only a problem when you need it and don't have it. When the bank says technical difficulties on January 1st, your liquidity is gone. Your silver, however, is always liquid. It can be traded, bartered, or sold anywhere in the world at any time. It is the ultimate insurance policy against a banking system that has proven itself to be unstable and untrustworthy. The evidence is in the charts, the data is in the vaults, and the laws are on the books. Don't let this Christmas be your last one with financial peace of mind. Prepare for the January 1st wealth reset. Secure your physical position, protect your family, and stay tuned as we track every move of the big banks in this final countdown. The game is changing. Make sure you're on the right side of history.